This is Justin Pulitzer. This is my weekend review for June 7th, 2015. A lot to cover, so I'm going to just jump right in. So, as you can see, we're in a bit of a pullback in the S&P 500, and I had discussed that I thought we were shaping up for a similar pattern to here, where we kind of looked above range and then fell back to mid-range, and that seems to be playing out. So there may be a little bit more downside to go, but I don't know if it's going to be enormous if this pattern is to hold. So let's discuss a little bit what happened this week with regard to the jobs number that looms so large on Friday, and how I kind of amalgamate that into my expectations for what's going to happen going forward in the S&P. So on Friday we had the NFP, the non-farm payroll number, come in at about 280,000. The unemployment rate, the big number, quote unquote, ticked up to about 5.5%, although as any of you business school wonks know, 5% is technically considered full employment, maximum employment with the a healthy level of slack in the labor force, so to speak, for I guess new business hires. The hourly wage did tick up slightly, 0.3%, but the labor participation rate is still languishing down at 62.9%. It did improve slightly from the last read, but as we know, this is the lowest read in about 37 years. Since 1978, this is the lowest it's been, and that just means that the amount of people participating in the labor force is the lowest in modern times. March's numbers were revised up about 34,000 to 119,000, but if you look inside these numbers, and I do, you can see where the gains came from. They came from leisure and hospitality, and I have gone on record saying in some prior videos that this basically just means that our nation is becoming a nation of bartenders, waiters and waitresses, and I guess carnival ride operators. There was an increase in retail sales, so I guess those that didn't want to wait tables were selling jeans and overpriced rugby shirts at Abercrombie. Temporary help went up. That's not to be unexpected. It's, I guess, expectable considering it's summer and people are getting jobs. Government picked up some of the slack with some increase, and then mining jobs absolutely got slaughtered. So that's sort of, those went down huge. So that's really where these jobs, these quote-unquote good jobs are coming from. And I think that if you put that in the context of falling GDP, we had a negative GDP print really for the first quarter, although now they're saying it might have been revised up slightly. This is still stall speed. Very weak durable goods orders outside of Boeing and aircraft. They would have been negative if there weren't an increase in aircraft. And if you look at the consumer confidence numbers, these aren't blow the doors off types of numbers. It's still showing for a stagnant, slow economy. That doesn't, however, affect the media talking heads and the people who need to, I guess, make a living by reporting news, building the fear of a Fed rate hike. And that number, it's sort of, when are they going to go? That's sort of the big conundrum, because everyone, quote unquote, knows that the market has to go down when the Fed starts raising interest rates. And I actually believe that probably will be the case temporarily, although I don't know if it's going to be the case longer term. But I'll discuss that in a little bit when I discuss the TLT. But in the meantime, as far as the S&P goes, what is being priced in, and I was sort of looking at the open interest strikes in the SPDR options in terms of the weeklies, and also with regard to the monthly, which is, we have Q2 expiration, not this coming week, but the following. That's the 12-day to expiration series. Anyhow, with regard to that, the expected move for the current week is $3.14, and into expiration is a muted 4.94 points. So if you look at those expected moves, that would roughly take us down, if we did have the total down move, into the 206s area, somewhere between the 207s and the 206s, I would say. And you can see that these are important reference areas. We also have a 100-day moving average looming large here. You can see that sort of has been the support the last few times. So that may happen again. We could maybe just have a little bit more down early next week. Maybe it's violated intraday. You can see we've had plenty of violations, but it's sort of roughly held it. It may also want to come back down and retest into these lows, which are roughly where that measured move would take us. And if we do come back up to the upside, that would take us close to the all-time highs, actually. It would take us up to, I don't think a lot of people are expecting this. I think a lot of the people, there were a lot of people I noticed on the stream who were chasing this day. Then they got stopped out here and they went short at the lows. And that's why I don't think there was a lot of movement on this Friday, because so many people had piled in at bad prices that they kind of just took profits as they could. And you also notice we held the reference high of this past range. So I believe that there were some buyers in here who came in, and I think a lot of people now have repositioned short, and I think they would get caught off sides if we came up above here, and that would easily take the market up pretty quickly. You can see this move hasn't really been like this cascading move down like we saw here. It's been like this very begrudging move like we saw here. So there might be a little bit more steepness to come, just to kind of to finish the auction, so to speak. But I'm sort of not necessarily putting my chips on that, although my chips are on that for lower. I do have put ratios on, in full disclosure. I have on 205s and then short 2 times the 202s. So that would be basically a play down to these lows. And then it would get me long down at this distribution, which is a big gap fill, and I think an area that would have a ton of support, at least short term. If it didn't, the break even on that is like just a little bit below 199 when you factor in the options, like the premium I collect, which would be down here, also around these lows. Plus, you have to keep in mind that it is a quarterly expiration, and I think that 200 strike would be an absolute wall, sort of, so to speak, if we did really get down that low, and it would be such a cascade that I think that prices would sort of exhaust themselves. I don't really know that that's going to happen, although I got it on for I think it was like a 7-cent credit or whatever. If we do come down early this week, those will be a little bit under pressure, but I think that the range, so to speak, to quote Maximus in Gladiator, the range is good. So that's sort of my thinking, that the options, believe it or not, when you look at the open interest, didn't really give me so much of a reading. There wasn't anything that really was glaring out at me. Actually, what was glaring to me was the, so to speak, would be the most pain to kind of the maximum fudgery would be to pin this like 210 area just up in here and sort of not go anywhere. That would be an absolutely amazing thing to see if it takes place. I don't know that it will, but if I kind of look at where the range would take us, it seems like there's a lot of support down in just a few points below, and I don't think that anything much below the 205 is really showing all of that much open interest, and you could see that the 200-day moving average would roughly be there. So I think the downside sort of in the next 2 weeks could be quote-unquote limited. I guess that could also be famous last words if we do collapse. But usually when those things kind of happen, it's after a quarter, after an expiration, not in front of it. So I do think that there is a bit of a limited window to come down, so to speak, in the next week. But then as we sort of get into the quarterly expiration, the Q2 expiration the following week, there could be some window dressing that would take us back up, particularly if we come down. So I had said on Twitter I thought that there was a narrow window to come down, but there is also one that a window after that would probably bring us back up. So that might be the order of events. If we do wind up coming up above these highs, so to speak, I do believe we will go and retest the all-time highs up here. I have said in the past that I did think that this time has the potential to quote-unquote be a little different, because we did get the 1.618 Fibonacci extension up here in the 213s. So I am on guard for a bigger break potentially to the channel low, which would looky here take us to that 198. And remember where I said those break evens on that put ratio was that I had discussed for the monthly expiration, the 12 DTE. So I don't think I'll get my what's in a ringer, so to speak, if we do have such a violent move down. But that's yet to be determined. We will see. Currently, I am in this mindset that we're going to make the move mid-range and then probably chop and come back up. So that is my thinking with regard to SPY. One of the things that has me thinking that thesis is correct is the relative strength in IWM. You can see that was significantly stronger on Friday. We closed basically back up toward the top of the range, and we are above the downtrend line. This could get a little funky and it could roll back over, but the relative strength in IWM tells me that the market doesn't really want to fall apart, that it's sort of this begrudging move lower. So relative strength in IWM showing that the market has a little bit of, there are still BTD people, and that just means buy the dip. Qs are a little bit weak. Remember I had discussed that there would be a lot of talk about a double top or a rounding top. I haven't really heard that much of it, but it is kind of playing out that way. And we are a little bit below this 109.42, which is what I think we need to be above for still higher prices. That said, 50-day is right below us. If that gives, there's a little bit more room down to this sort of downtrend, this uptrend line, which comes in around the 107s. And you can see that there are plenty of support levels down here for playing by the dips in the 106, 105, 104. I don't know that we're going to get down that week. It's going to kind of depend on a couple of stocks. So that said, take a look at Apple. It's being a little bit of a PETA, right? A pain in the ass. It's kind of rolling. It made a bit of a lower high here. It's kind of rolling back, although just drifting, so to speak. I think these are just some people who are taking, I guess, some profits ahead of the developers conference, which is Tuesday. I think that a lot of the hype of that had kind of got sucked out because they're supposedly not going to launch a TV box, so there might not be that many people playing ahead of it, which to me means that the risk could be, believe it or not, on the upside if there is some type of a surprise. I've been saying that below 129.85, there's really no reason to be long. We sort of broke below there just a little bit. There is a right or right out play that probably will come into play early next week with a 50-day moving average and also a trend touch, which could kind of catapult us back up a little bit. Maybe if it happens Monday, maybe some people get some religion in the stock and think they want to play long for the event. I've been long a 129, 133 call spread. I'm still long that. I'm trying to roll it out a little bit longer just because the volatility is so low. It won't cost me very much to do that. If I can get that on for like under 5 cents, I will. I will discuss that on the stream if I get fills, so be sure to follow me on Twitter. The handle is @JustinPulitzer. Shameless self-promotion, but hey, who's going to do it if I'm not? So anyway, Apple looking a little bit weaker, but just in the context of it's kind of in the chop range. It's sort of coming mid-range here. We got up a little bit toward the upper end of it here, and now maybe we want to come to the middle of it or potentially even to the lower end of it. I would be a buyer in size with Apple if we ever did get back down close to the channel low. I believe that would play for a major, amazing setup actually in the stock for quite a large bounce. I had been short 123 puts to finance this. I had taken them off up here. I'm looking to kind of put them out again. I don't know if I'll do the 123s again, but I would be looking to sell another strike to lower my cost basis on that call spread. As it is, it's like 80 cents or below, and $1 an apple to me is really no big deal. If I lose it, I lose it. I've had a pretty good track record in the stock. Not that I'm ever comfortable with losing trades, but it's the risk reward there to me is good. Oops, it would help if I could type. Google. Nothing to see here, just a choppy, ugly mess. You can see it's used up a lot of its rally time in this chop zone. It is between this 545.41 and 553. Anything above 553 to me is a little bit more bullish, although now I would even move that up to these highs, so 558.79-ish. And then I have no position on in this stock. I haven't in a while. I had told people to kind of sell it up here. This is when everyone was getting ginned up and excited. I was taking profits on a call spread that I had played, a risk reversal call spread that I had played, and I haven't really ever looked back. I haven't been in the stock. That said, there is a huge confluence of moving averages down here. I do think that it's probably going to support and chop for a bit. I am looking for Google to move a little bit higher, but I don't know that it doesn't need to come lower before it can go higher. chop, I would say wait for the break, kind of wait for it to break out here to play for a move back up to the highs, or wait for a break of this range to play for the range low. That's just sort of how I see Google. Not really that much going on there. The VIX hasn't really been showing tons of strength here. You'd think, right, with all the panic, with the rate rises, it can't even hold above the 200-day moving average. It has been making higher highs, though. Please keep that in mind. And a snap of this could bring you up into the 17s rather quickly, but it isn't showing, the kind of breakout pattern. It's just showing that it's kind of being forced up higher a little bit, and then it's kind of just falling back. It is above the 50, so that kind of gives it a little bit of, I don't know, some support, I would say, down here. The VIX sort of always has some intrinsic value. As it pushes down to the lows, it gets cheap. And I've been saying that premium in general has been too cheap to sell, so playing directionally with long premium isn't really a style I love. I'm usually an out-of-the-money premium seller, but if it's too cheap, it's just right to buy. So I've been playing long. Hence, in a lot of names, like I did with Gilead and Apple and Facebook and a lot of these stocks, I've been playing it that way. TLT got my measured move. I had been discussing around this 117-ish area, and the bounce has been a little bit weak. I would be looking early next week for either a short for a break below here, down into the 61.8, somewhere between the 15s and the 13s would be the next target level. That the 13s would be the full 1.618 Fibonacci extension from this range down lower. But I would also look for a potential fake out and a move back up. I'm actually thinking I'm really not all that ginned up that the Fed needs to raise interest rates. I know that's consensus here. I have not been with consensus on the Fed for quite some time. I do think that rates will rise eventually, but I don't think that they're going to rise in the dramatic fashion and the panic that everyone seems to think. Just for the simple fact that the economies in the world are not good. This interest rates rise from money demand, loan demand. And most companies have just been sort of refinancing, selling debt, and buying back stock as opposed to investing in business expansion. And I don't really see the reason for that to change here, considering a lot of companies are first. The Obamacare is first coming on with the public exchanges for corporations. It's hit the individuals, but it's now first coming on. So I think there is a little bit of iffiness about hiring, and hence you see why the temporary labor numbers and the hospitality and leisure numbers have come up. These are all numbers that don't really require the Obamacare to be implemented into. That's what these are the type of jobs. One more thing that isn't being talked about, I know this because I worked in the leisure and hospitality industry for quite some time with my own promotion business. There is a proposal to add gratuity into the bills and to the taxes that is being proposed in New York City, and I think if it is adopted there, it will be adopted eventually countrywide. So that may start banging these labor numbers even worse and probably causing layoffs because businesses probably will close. So that is just something that's not something that's going to matter this week or for the quarter expiration. It's just something to keep in the back of the mind for kind of future stuff projecting out longer. So that's TLT. I am looking for, by the way, a right or right out trade. If it does get down to these channel lows, I am going to be looking to buy this thing in size for a bounce up into the mid-range. That is, or if we do wind up rallying, looking for a short at the extreme. I like to play TLT at the extremes. I like to short it at the extremes, and I like to buy it at the extremes. So right here, I'm sort of SOH, just sitting on hands. I'd rather be SOH than SOL, meaning shit out of luck, but I know there's a family channel, so that's about the most of the four-letter words you'll get out of me, but I am looking for some type of a movement here, either a kind of a buy over here for a move higher over this high, this little swing high, because that would confirm to me a double bottom, and then or a breakdown here with a right or right out short, maybe with a put ratio for a move down to these lowers, the 15s or the 13s. So that's my thinking on TLT. Crude oil hanging in like a champ. My theory is that it's going back to 75. A lot of people don't want to acknowledge that that's a possibility. It's a little bit hard to comprehend if you look at some of the big oil stocks, and I'm going to go through those charts in a little bit, but those could be like false breakdowns. I'm looking for a potential retest of the 54.24, although we are holding the 50-day here, and the Friday action was a little bit bullish. OPEC decided not to raise their production, but rig counts are coming down in the U.S., so I guess that's how you're getting your production cutback, by hook or by crook, and it seems to be coming on our side. I am looking for the move back up, at least to the 38.2 fib retracement, to the 67s, and really the half back and where the real breakdown was at 75. That's my call. We'll see if it happens. If we start losing the 54 a quarter, then I'm going to start thinking that we're going to come back mid-range here, closer to $50, and that would start having me think recession is in the cards. And if that happens, you're not going to see any Fed rate hikes. You can quote me on that. Exxon, looking weak here. We are below these 86.03s, back coming down to test these levels. We'll see if this is sort of a double bottom. I'm watching this one closely. I am looking to get long Exxon. I just don't know if it's going to be here. If it breaks, I've been saying that it's vulnerable potentially down to $74. I would be a buyer in size down there for right or right out on the 61.8. So we'll see if it has that next leg down. If that does happen, you probably are looking at a lower oil price, and that could signal recession. Chevron also coming into these levels, really key to hold. If these bounce here, that's going to help with my thesis on oil for higher. Another one I'm looking to buy, but Chevron I'd probably be more interested in, again, buying lower, maybe down in the 80s or the 90s. I'm not all geesed up about buying it on these lows, considering how many times we've touched it recently. It's kind of has me a little bit iffy. BP, on the other hand, I am looking to buy here maybe early next week on a channel test for right or right out. If this snaps, I'll probably flip short and play to fill up the triangle down, back down into the high 30s, 38 to 36 potentially. So row here, if not, row here. That's sort of just how I see it. A lot of people aren't that dynamic in their minds. They want to try one way. I kind of like to go either both ways. If things don't work one way or the other, often I'll get in a position and then flip it pretty quickly. So here also Total, this is the sort of the French Exxon. This one I like to buy for dividend sake in the lower 40s. And I did play this actually a few times back here, and then now I'm out of it, so I'm kind of looking to get back in down here. So I do believe that down here could set up for a good right or right out buy for this Total. Enbridge is another one I like. I've talked about this for a while. I actually did buy this a little bit here on Friday. We didn't get the bounce that I would have loved, as strong of a bounce, but you can see down here there was some hesitation before the rally higher. I'm just playing this right or right out with the channel. If this does snap, I would probably be looking to buy it in the lower 40s again on the more dominant trend channel. This is sort of, it's formed a channel within a channel, and I just believe that this high volume area here is good. I have been saying I think that it's going to retest these 57 highs. This was the when they pulled the KMI, where they're kind of consolidating their assets into one stock, and I do believe that this 57 is going to be retouched at some point. I don't know when, but that is sort of how I am playing it. IBB looking rather bullish, not really showing the breakdown I think that the bears would like, although we are still below this last swing high. We are just sort of like shelving out here above the downtrend line, which is good. And you know, this 368.26, if we can get back above there, I do think we'll see the old highs. I don't know if how much higher we'll go, although that would be the classic W pattern, and there is potential for a move to the channel high, which would be significantly higher. There are some stocks that are making this to me look very potentially possible. One that I've been bullish on is Gilead. I just wish this SOB would pull back to this mid-range for another right or right out buy. I've been mostly out of it at this point, and now that we're getting closer to the 116, which is the old high, which I do think we're going to get to. I don't know if the order of operations, again, so to speak, if we get there and then pull back, or if we pull back in anticipation. But I am a buyer on this stock right or right out, back into this sort of a retest of the breakout range, which really would be somewhere between this like 105.95 and this, I think this is already now 109.5. So somewhere in this range, I'm looking to be a buyer again on, or maybe even a put seller, or buy call spreads, or finance that with some type of put sale. But I am looking to buy Gilead on pullbacks. This Regeneron is an absolute monster. This is not a stock I've ever been in. I'm sort of killing myself about it, but we are getting to the 1.618 fib extension of the range, also looking good for Biotech. So you can see broke out, strong body. There may be a pullback. If you haven't been in this stock, yeah, granted it's day one of the move up, but really of the breakout. But I'm always loath to buy stocks like this, particularly on a low conviction market that isn't trending. That is the key. These types of moves, on a trending tape to me are absolute chases, like on a move back to like halfway back on the candle, like if there was weakness Monday, and you could still do this, if you could get half back, buy the dip, and then, see how it goes. But these types of moves to me have been failing a lot lately because there's low conviction. You get these pops and then they just fall apart. So just be a little bit careful chasing these types of stocks. Biogen is one I am looking to buy. This did have a bit of a blow off on their news. I did some measured move work. I am looking for a bit of a gap fill or maybe a little bit of an overshoot back down into the middle of this range, into like the mid 300s, a little bit lower. And then I think it's buy the dip, and you'll have seen one leg, two leg, and then on the third leg, I think it would be a buy the dip type of a situation. I think you'd have shaken out a lot of the weak chaser BS that was in there. So mid-range here to me is somewhere between the gap fill and mid-range is BTD on Biogen. Ambarella. This one gets a lot of talk. I'm another one. You can't play them all. Unfortunately, I've never really believed in these stocks, particularly GoPro. Although Gambarella, I don't think I really understood the story so much to begin with. I have no shame, saying I missed it. I catch a lot of them. I can't catch them all. I will say this. I haven't been on the stock, so I don't know that you want to listen to me on it because it's not one that I've played, although I do know price action, and I will tell you this, that this is up a lot. A lot of days we're starting to get really, really steep. The moves are starting to get big. I would be looking to sell this thing into strength here and looking to buy it back on a dip. It is a BTD stock, obviously, but you can see, we are well above the old channel. This thing broke out in major style. It's been up now, let's see, since this move started, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20th day of a rally with some little to no consolidation, like 1 or 2 days in here. And here you did have a couple of days. I would be looking to, maybe buy a put ratio for some type of a move back lower on any type of weakness. I think you could retest these sort of breakout areas. But, how high will this go? I have no idea. The thing is really bullish. If you're long, just stick with it. Draw a trend line here and just play it that way. But if you're first looking to enter here, I'd say you're a little bit late. GoPro, not one I like. I don't believe in this country. I don't believe in this company. I believe the company is BS. I don't think they have anything really particularly proprietary, and I think that Apple will have something to compete, or someone will at some point. There's already Xiaomi who are making competition cameras, which are like $100 or less. And this has been up because they had a touchscreen that they came out with. Big whoop. We've had touchscreen iPhones for a long time. That said, after I've kind of stood on my soapbox here telling you how I don't like GoPro, I do think the stock looks bullish. It's over 54.06. Any type of check back into here to me would be a good write or write out buy for a play still higher. That said, a little bit of caution. We got into the 38.2 Fibonacci retracement. We're also starting to get into these breakdown levels here. So like if you've been long this, I'd be looking to sell it on a pop into this distribution. You can see there's a lot of people here who are going to be made whole. It's roughly the 50% Fibonacci retracement, somewhere between 64 and 67. This is where the real breakdown in the stock occurred. A volume distribution and a fib, a big prominent fib. So if you're long, great. Look to take some profits up here. It'll still be a pretty nice move, still higher. If you're not, defined risk only, I would say call spreads, or maybe look for a dip to buy for the move back higher. The stock does, like I said, the stock does look bullish. I do think it'll probably go a bit higher, but I'm not a huge fan of the management, and I'm definitely not going to chase it here. I would buy a dip though. Amazon just kind of flagging out, hanging out, drinking stout. getting to the channel low. So this could set up here for a nice right or right out trade. If you're looking for the momentum, you still need to take 439, which would take this range out and I think take it up to the highs and probably new all-time highs. I am looking for a move close to 500 on this stock. It's a little bit out of season. Amazon tends to move in the later part of the year, but if you look at the channel, it's been very defined, you know. I mean, we're at the low end of the channel. It's worked off a lot of the sort of the excess on this move. I think it's going to go higher. If you do have some type of a breakdown, then you know you could always play for the gap fill. Either way, I am looking for a play in this probably early next week. If we break the channel, I'll probably do some type of a put spread or ratio for a move a little bit lower. I don't know if you get the full gap fill, but I do think you'd get some of these fib, at least the 61.8 fib. If it does break, I could maybe do a call spread for that type of a move. You could see here it did take a while and it did take earnings to gap, and earnings here are quite a ways away. So I'm not really sure what gets Amazon going, but the pattern does look bullish. BABA, sort of like the GoPro chart, right? Came up a bit, now coming back to retest. Maybe that's what's going to happen in the GoPro. But as long as it holds this 89 over this here 89.29 high, I think the stock still remains bullish for still higher prices. There's a big lockup on this coming in September. I think they want to manipulate the shares back up to 98 or 100 so that those shares kind of have interested buyers. So I do believe the path of least resistance in this stock is going to be choppy to higher. That said, if we lose here, just GTFO or look to play it short with some type of put spread or put ratio. Facebook, I'm bullish on. We got a big move. We are above this high. If you're sort of a chicken little, Johnny come lately in this, look to be above 81.85. Anything below there to me gets a little bit more iffy, although I think the real litmus test in this has been proven to be the 50-day moving average. Look how much resistance it gave here. Now we're back above it. I'd actually be looking for more of a right or right out buy off the 50-day for a move back up to the all-time highs. I do believe this stock is going to get to 100 at some point. I don't know when. You do have the earnings coming up. I think that you just have to be a little bit cautious on this with the dollar. That's really been the defining issue for this stock, right? They said they've had some dollar risk, and you could see the dollar is in a little bit of a downtrend here. Even with all this Fed increase fear, you can see it snapped the trend. It had a failed check back, so just keep an eye on the dollar if you're playing Facebook. That might be a tell, sort of, so to speak. We can see we are consolidating. I'm bullish on the stock. I do believe it's a BTD stock. I know there's a lot of controversy on the stream. I've been going back and forth with one of my followers who I think is a very smart guy. I just think he's sort of missing the big picture with Facebook, that they're stealing share from Google and that they have accelerated revenue growth as they bring on more businesses with Instagram advertising and mobile payments. And these guys, they create a business overnight. It's kind of got like $1 billion type of valuation. So I do believe that they will continue to monetize and the stock will go higher. I also think that once Snapchat comes public, it's going to show just how cheaply Facebook bought Instagram for, and it's going to be I think it's a buy the dip stock. Twitter, really a piece of JUNK. Really kind of just basing here. I think a lot of these chasers, you can see the last time it did this, it kind of had this leg down and chopped for a while and consolidated. We are below trend a bit. We are back to like this 100% retracement here. I think their quarter is looking like it could be a little bit crappy. So not to get everybody a little, let's see if I can bring this out a little bit further. 2 years daily. I don't want to get everyone too nervous. I am playing this slightly long. I do have a slight long position in here. I am looking for a bounce back up to close to like $45. But I will tell you, if their earnings are junky again, there is potential for yet another leg lower to retest the all-time low here at 29. I believe Facebook is better than them. I think Instagram is better than them in terms of monetizing. I don't know if it's a management issue. You can see we are really bombed out on the stochastics. So I would be surprised if there isn't some type of a rally back up. Like I said, I'm playing it a little bit long. I'm not huge in size here. But I do believe we will go back up and retest this, like I said, the 45 level. But be mindful, if they miss again, it's possible that there is yet still another leg down in Twitter. So protection, I would say. LinkedIn, did what it said I thought it was going to do. Unfortunately, I can't play every stock, and I did miss this. I'm a little pissed about it because I was kind of looking to do it this day, and then it just kind of took off on me, and I was busy with some other stuff, and the rest is history. Stock looks bullish. It's into the gap. I do think it's going to get back up a little bit higher to retest the 50-day, so up about 228. You can see this 50 and 200-day moving average confluence. It should get roughly about there, I think. I do think that this is sort of a BTD stock if it comes back down. I'd be a little bit cautious if it comes back too far, more than halfway into the range here. I don't like chasing. I'm more of a, I like to buy dips on these stocks rather than chase, but I do think LinkedIn is good at monetizing. I think that they guys got nailed on the quarter. We'll see what happens here. If this does break down again, then to me, I'm going to start having to reevaluate the entire social space, because I would say that the ground is kind of shifting on it. And that would have me reevaluating a lot of stocks. FireEye bullish. I've been saying that this was gonna I was really calling for this move, and did we get it? So I guess I redeemed myself on this one because I missed LinkedIn, and this one was a bigger mover. So, and we're kind of at new 52-week highs, which is always how I like it. I've been looking. You can see it was a little bit of a begrudging move, right? I was starting to get a little bit pissy about it, but I have been looking for a move higher. The channel high is roughly around 53s. I'm playing this, I forget the strikes. I think I'm long 47.50 call spread. So it's in the money. It's doing fairly well. The only mistake I made with that is I put it on for a little bit too much time. I didn't know if we were going to get the move this fast. But you can see I've been saying that the news is at their back in terms of the momentum. We just had that huge deal with Visa. And I think it would have gone higher this day, but the market was really weak, so it took it down. But then we had the big government hack by China. These guys are on the front lines of that war, and I think that this stock over time has a lot of room. I also believe it's going to be a takeover candidate at some point. So keep that on your radar. I'm bullish on all these stocks on dips. CyberArk also, I like this one. This one's a little bit pricey. They also have a small float. It's also showing a lot of relative weakness to the other ones, but I do believe that this is still a buy the dip stock, although I do prefer FireEye. The other one that's real bullish is this Palo Alto. You can see that Palo Alto has had a notorious history of being a buy on the 50-day moving average. You can see all these times it's held. So I am waiting on this one for a move back to the 50 MA, and I will be a buyer there in size for RORO. So there's room to the channel high. You can see fairly significant room, actually, but it's a little late to chase. My chips are on FireEye. But Palo Alto, definitely a buy the dip type of stock, at least in the world that I follow. Let's see, what more do we want to do? Am I frozen? No. Green Mountain, I'm a little bit frustrated with this because I was looking to buy this sucker at the Coca-Cola gap fill down at 80, 88. You can see I had my alert here at 81, but we decided to turn ahead of time. I'm not sure if this is going to be like one of these where we just have a couple of days and then roll over again, but I am looking to buy the dip in Green Mountain. This was a head and shoulders breakdown, a pretty textbook pattern, a failed checkback. We are in a down channel, but you can see it's a very defined channel that is held well. So I'd be looking to buy down at the channel low here for some type of a throwback to mid-range, maybe close to like maybe we get close to 100 again. But I am looking to kind of buy this. I'll probably do it with call spreads or something, or maybe even small with shares for RORO. But I do believe Green Mountain is going to have some type of a bounce soon. IBM, getting the pullback that I was looking for to retest the 165. This area to me is a good right or right out type of a play. There might be a little bit more give into the range. So somewhere between this 165.35 and the 100 MA, I think is a great RORO play for a long for a bounce. I do think this gap is eventually going to fill. Warren Buffett keeps adding shares, and Buffett is Buffett, right? Netflix, bullish, I think late to chase, although the stock is likely going to still higher. I had played this a while back. I'm now out of it. I'm sort of a little upset that I didn't re-up, but this thing is just market weakness by Netflix, right? I think it just seems like it's bullish. I'm not a chaser in this name. I do believe it's higher. If you want to do it with some defined risk stuff, some call spreads, or maybe sell some out of the money puts on pullbacks. I do believe, though, that at some point we are going to get back into this earnings gap range. I don't know how that's going to happen, if it's on a bad number or if there's some selling ahead of the quarter. But I would be a buyer in this earnings gap range here, somewhere between the 530 and the 568.75. If there is some type of a pullback, that would also coincide nicely with the 50-day moving average. So I would be a buyer on Netflix on pullbacks, but the stock looks bullish. Just trail up the stops if you're long long it for higher. Just trail your stops. Price line still in the down channel, just chop mess. Not really a fan of anything in here other than it's a messy chart. If there is some type of a more extreme pullback, I'd be looking to buy the dips, or if we can break the down channel and then take this swing high, then I think the play is back higher. Price line sometimes gets a little bit of Mo during the summer. I think it was 2 years ago when it had the real run, but that's my thinking on that. Tesla, bullish consolidation. We are breaking this really narrow channel here, but more by time than by price. But you can see we're consolidating. I am expecting a move up to fill this gap to the 257s, potentially to 265s. I do believe it's going to retest the all-time high and make even still newer highs. And I'm going to work up a 1.618 Fibonacci extension because I do think when this happens, it's going to be epic and this stock is going to be up maybe even a double, believe it or not. It sounds a little cray-cray, I know, but I do believe that Tesla is fairly bullish, and I am looking for the breakout of this range for still higher. So that will be how I'm playing it. If there is some type of a breakdown here, I'd be looking for a short type via put spread or ratio down to the 50-day, 200-day moving average confluence. This 225 has been an important level before. I believe that would set up also for if there is some type of a market correction for a pullback right or right out play. TASR, bullish. Look at this consolidation pattern. I'm sort of just waiting to jump on this for a buy. It always seems to get away from me, this stock, but I would like to buy it somewhere down in the high to mid 20s if possible. That's sort of my wish. We probably won't get it. So just waiting for a downtrend line break to play this. I think they're going to have years and years of growth with all this stuff that's going on in Ferguson and in Baltimore. Lastly, Visa, really disappointing. This wasn't an expensive disappointing, thankfully, but I am long a 70-75 call spread. There's about 2 weeks left on it. It's probably going to be worthless, unfortunately. The calls do have, the lower strikes still have some value to it. The upper ones I'll probably just buy back if I can get them off for like a penny or two, which I believe they're close to. I do believe, though, that the channel low and the 50-day moving average confluence are somewhere between there and this gap fill, somewhere in the 66, 77-ish area, so between like 66s and 67s. This will set up for a good right or right out type of play. I'll probably try again there, so to speak. Anyway, let's wrap it up there. Please be sure to follow me on Twitter. My handle is @JustinPulitzer. Be sure to hit the like button just below here. It's the thumbs up if you found this video useful. Appreciate your time, and let's have a good week, and cheers.